Today we bring to you one such IPO, Lvl Energy Fund Limited, and joining us today is Mr. Sumit Arangala, the CEO of Lvl Energy Fund Limited. Welcome to the show, Mr. Arangala. Thank you for joining us. To start off proceedings, if you could give us a quick introduction into the company's background, the key shareholders and etc., and what the company's operations are like.
Yes. Lvl Energy Fund was created by Lanka Ventures PLC, which is a listed venture capital company, consequent to a decision of the board that Lanka Ventures should focus on investments in the energy sector. So way back in 2006, Lanka Ventures decided to form Lvl Energy Fund, and all the investments in the energy sector were channeled through Lvl Energy Fund.
Right.
So the major shareholders of Lanka Ventures, it is a subsidiary of Equity Partners, and Equity Partners is a equally held joint venture between DFCC Bank and Hatton National Bank. So Lvl Energy Fund since 2006 had been investing in the sector in a whole gamut of projects, varying from hydropower to thermal power. So we have had investments in hydropower projects and wind power projects and thermal power projects. So we think that we have built a highly diversified portfolio of investments in the energy sector, because as you know, hydropower is very susceptible to the weather patterns, the rainfall, which can vary from year to year. So without focusing entirely on hydropower, we diversified into wind power, which is not as varying in terms of energy generation as hydropower. The two plants that we have invested in are in Kalpitia Peninsula, which is considered to be the best location for wind energy generation. Then we also, in order to mitigate the risks arising from seasonality of income from hydro and wind, we decided that we should add thermal power, which will bring in a steady flow of income to the company. So we, as you know, there is limited scope for thermal power in Sri Lanka. So we ventured out to Bangladesh, which has tremendous potential for thermal power, and we invested in 2 thermal power projects of 52 megawatts each in Komila and Rajshahi in Bangladesh, which are doing very well. So our portfolio is well diversified in terms of energy source. We have hydro, we have wind, and we have thermal. In terms of diversification within the sector, if we look at our hydropower projects, they are scattered around the country. You know, if there is poor weather in some area, you know, there can be a good weather in another area. So we have power projects in Gaul, in Nuwara district, in Badulla district, and K-Gaul district. So we have tried to diversify our portfolio by geographic location also, to mitigate the risks arising from changes in weather pattern.
Right. If you look at the industry itself, your bulk of your portfolio is in Sri Lanka. You have a Bangladesh investment. With the IPO, you're looking to go across into Nepal as well. If we could have a quick brief on the industries in the respective countries as well.
Yes. Now, Sri Lanka, as you know, there is not much scope for private sector investment in thermal power. the hydropower sector is also getting somewhat saturated, because all the good locations what have been allowed for development for the private sector have been developed. All the high head projects are now fully developed. So what is available for private sector investment are the low head projects, which are expensive to set up. So given the current tariff structure, when we work out the economics, shareholders might not be getting sufficient return. So that might be one of the reasons why low head projects are not getting developed and not very popular among the investing community or among the developers. The wind power sector, yes, wind power you cannot put wind power projects you cannot put everywhere. So we have I think in Kalpitiya Peninsula now is fully saturated.
Right.
Putlam district, there can be opportunities, and northern area like in Jaffna Peninsula, there are opportunities subject to availability of grid, and if the government decides to open it out to the private sector, yes, there can be opportunities for further development of wind power. Then solar power, yes, there is tremendous opportunity, but as you know, land is a scarce resource in Sri Lanka. You need vast areas of land for solar. So and grid related restrictions, considering that the development of the solar power industry, although it will certainly improve in time to come, will be done slowly but steadily. Then having considered the limitations, particularly in developing renewable energy projects in Sri Lanka, we decided that we should look at countries like Bangladesh for thermal power. Bangladesh is a country that has a permanent power cut every day.
Yes.
So their natural gas, which is available in abundance, is given free of charge to householders for cooking purposes. So unfortunately, they cannot develop any more power projects using natural gas. So they are increasingly resorting to thermal power in the sense diesel and heavy fuel oil based power plants to meet their urgent need to supply the demand. So just recently they announced a tender for 1,000 megawatts, and we have been successful. Our partners have been successful in getting one of those tenders for 100 megawatts to develop a power plant in Feni, in Bangladesh. So there is tremendous opportunities in Bangladesh for development of thermal power. Then you spoke about Nepal. Yes. So Nepal, I am told, has 40,000 megawatt potential in terms of hydropower, which is enormous. Whether all that can be developed or not, I don't know. But we thought we will start with a small plant. So along with our partners, we plan to invest in a 10 megawatt power plant called Makarigad. And unlike in Sri Lanka, hydropower projects can record very high plant factors in Nepal, because there is consistent flow. Most of the time these water is flown or water comes from the glaciers. So in Nepal, the kind of plant factors we can experience can be as high as 80%. In fact, that is the case in Makarigad power projects that we are planning to develop, compared to average 38% in Sri Lanka. So there is tremendous potential there, and they are investor-friendly countries. And the two power plants in Bangladesh are already paying dividend, and we have had no issue in getting the dividend to Sri Lanka. So the Bangladesh power plants, the payments are very regular. So a lot of the things, the risks that we perceived at the time of investment, I must say, have been largely mitigated or are not non-existent. And I will be failing in my duty if I were not to mention about our partners. Our preferred partner in most of these projects, whether in Sri Lanka or abroad, is the Lanka Transformers Group, which have had a track record, excellent track record, for implementing power projects on a timely basis and within budget. None of the projects that we did with them had exceeded the budget. So even to the future, that will be the case. And so we have the fullest confidence in them. And we think alike when it comes to distribution policy, etc. So we have had very good relationship with them. We will look at East Africa also. We haven't yet got any opportunities, but we are actively pursuing investment opportunities in East Africa for hydropower.
Having a good partner and investor-friendly countries are definitely a good combination for overseas projects, thinking about it. Coming to the listing itself, you're looking at 1.2 billion rupees and you're looking at new projects, and a portion of it is going to be directed at retiring some of the debt and likewise. The objectives and the nature of the listing and issue itself, if we were to discuss?
Well, as you can see in the prospectus, the IPO proceeds will be used in investment in 3 hydropower projects, 2 projects in Sri Lanka, and one, the Nepal one, which I mentioned to you earlier. One of the projects, that is the Bambarapana project, is under commissioning right now. So because the IPO got somewhat delayed, we had to use some bridge finance to invest in the company. So from the proceeds, we will settle the bridge finance facility. So that will become operational at the end of this year. So from the next year onwards, we will record income from that company. Then that is about 720 million rupees will be used in these 3 projects. The balance portion will be used to retirement debt. They are not premature retirement of debt. This is preference shares that are redeemable under normal course of business, will be redeemed, and thereby we will improve our borrowing capacity, because we will be reducing our debt significantly with the retirement of these debts. And for the future, to fund some of our new projects, we think with the equity coming in 1,200 million, our total fund base will be exceeding 3,000 million rupees, and we will be in a better position to borrow at attractive rates to fund our new investments. That is what we propose to do with the IPO proceeds. And IPO per se, if you were to ask me, I am a firm believer that IPO pricing has to be done in a way that it will be attractive to mainly the retail investors and of course the institutional investors. So we got an independent valuer to value the company's share, although it came out at around 13 rupees and 18 cents. We decided that the share should be offered at a significant discount to the valuation, and the offer price is 10 rupees. That is to offer something to the new investors, because I don't believe that we must go at the valuation, because there is then no room for the secondary market players to play in the market. So we are offering these shares at a significant discount to the market, and I hope the retail investors in particular, considering that fact alone, would be interested in investing in the company.
Beyond the pricing which you're looking at the IPO, what other benefits could investors expect in terms of a dividend policy and likewise?
Yes, very good question. Our dividend policy is very clear. We believe that dividend income that the company receives is too good to do anything else but distribution. So all dividend that the company receives will be distributed, and we have done that, and we have a established track record. Last year we paid a 60 cents per share dividend. This year, the current financial year, we paid an interim dividend of 24 cents just last October. So the new shareholders who are coming in through the IPO can look forward to an interim dividend next year. We usually pay 2 dividends a year. Our income peaks around October, so we pay 1 dividend around October and another dividend at the end of the financial year, or close to the financial year.
Right.
So when you look at it from that perspective, also it can be considered as a good dividend yielding stock for those who are looking for a fixed income.
Perfect. So there you have it, the Market Watch take on Lvl Energy Fund Private Limited, and we would like to extend our gratitude to Mr. Sumit Arangala for joining us today. Hopefully it has been an enlightening session for our investors as well. We wish you luck with your investments, and we definitely wish you luck with your IPO as well as your future endeavor. Thank you for joining us, and do join us next week for another episode, and have a great week.